Hi, my name is Alex Carlucci with Gustan Associates. I'm going to talk to you about closing costs and down payment. And a lot of you people find out the hard way that it's not just the down payment you got to come up with. There's a large amount of closing costs, and sometimes they can exceed your down payment. So, regarding what you need for cash to close and what it's made up of, and how this all works out is this. So, we as mortgage brokers have to sell you an interest rate, and then we have an underwriting fee. All the other costs associated with closing a loan are third-party charges, and they can be up to like $12,000 in some cases. On average, they're $7,000 to $8,000. So a lot of people don't calculate that when they think they're going to go buy a house. So let's say you're going FHA, you have to come up with 3.5% down. Well, you get another $8,000 in closing costs. So what we do is we try to combat that with a combination of seller credits or lender credits if you don't have the money in your bank. So remember that when you're buying a house, there's 3.5% down, probably minimum, maybe 3% down conventional, and there's closing costs. So you may need on a $200,000 house, $15,000 to close. So what we're going to do is we're going to ask the seller to give you up to 6%. We're going to cover the closing costs. Now, when you ask for that closing cost credit, even though FHA allows for 6% closing cost credits, that's $12,000 on a $200,000 purchase. Now let's say your closing costs are only $8,000. That extra $4,000 doesn't go towards your down payment. None of your down payment can be given to you by anybody. The realtor can't pay your down payment. The only place the person can give you a down payment besides a seller or a mortgage broker, or the only person who can give you down payment money is a family member. They can gift it to you. You can't use seller credits to cover them. You can't use lender credits to cover them. The only thing that the lender credits can do, which is something we would give you, or the seller gives you, the seller credits would cover just the closing costs. That includes underwriting fee, appraisal fee, tax certs, credit reports, year's worth of insurance, all your escrows for your taxes and your insurance, interest per diem, any weird title charges, any stamps for the city or the state that you're buying in, deed charges. So whatever those add up to is the most credit you can get. So conventional only go to 3%, so 3% is not going to cover it. That's too bad. And FHA go up to 6%, and again, you can't utilize always the 6% because sometimes that exceeds the amount of credits or closing costs that there are. So you got to keep that in mind. So you can get into a house with no money down by getting a gift from your parents and getting a seller closing cost credit. So your parents give you 3.5% down, which is $7,000 on $200,000. You get all the closing costs covered, which is $8,000 from the seller. You get in a house with no money on your pocket, so you don't really necessarily need money if you got a family member that wants to give you a gift. And remember, in some states, there's a thing called a tax proration where the seller actually has to give you last year's tax bill, or part of it, or a few months of it, or it just depends on each state. But some states have little ones, and some states have big ones, and those can go to offset your cash to close. So if your down payment money is 3.5% of $200,000, that's $7,000, and we get all the closing cost credit, then there's a thing called a tax proration that comes off of your down payment, which is $7,000. So let's say there's a $2,000 tax proration that comes off the $7,000 for your down payment. Now you only have to spend $5,000 out of your pocket. So the states that have that, it's a nice little benefit for you for cash to close. So that's kind of what you have to think about when buying a house: the down payment money and the closing cost. And if you don't have the money, remember, get the closing cost credited by the seller, or have the lender give you a credit. And if you don't have any down payment money, get a gift from a family member. And that's what you should expect from buying a house, and all the money that comes out of your pocket and how it gets accounted for. And thank you very much. If you like this video, please like and share it. If you want to see more of these, go to gustanshow.com at gustancho.com, or give me a call directly at 630-915-7550. Thank you.